Good morning, everyone. I see many participants from many countries here. Welcome to our webinar regarding the credit rating of Belarus. So today, as usual, we have different speakers from different institutions. So my colleague Denis Anokhov from RAEX-Europe will present the current trends in Belarusian economy and the Belarus credit rating. And we have today one invited speaker, Kateryna Bornukova. She is academic director of BEROC. BEROC is independent research center located in Belarus. So Kateryna is fully aware of current trends in the Belarusian economy, and she will present this topic also with a short-term focus for the Republic of Belarus. So we have 15 minutes presentation for each speaker, and then we have Q&A part. So please use the chat option on the right side of Zoom to send questions regarding the presentations, and our speakers will answer them after the presentation. So let me invite Denis to start with his presentation regarding the credit rating of the Republic of Belarus. Denis, the microphone is yours.
Good morning, dear colleagues. Thank you, Vladimir. I will share my screen for presentation. So, good morning, everyone. So traditionally, before moving to the discussion of rating, I would like to introduce briefly our rating agency. So RAEX-Europe is in Frankfurt since 2013. Frankfurt, Germany, we're registered by European Securities and Market Authorities, which means that all assets rated by our rating agency are useful for regulatory purposes in the European Union. And also, as of April 2018, we received the mapping from the European Commission, which is useful to compare our ratings with the ratings of other credit rating agencies. Besides the credit ratings for financial and non-financial institutions, we also provide non-credit ratings such as ESG assessment, environmental, social and governance, and green and social bond second opinions, as well as we provide different reports and industry research, and also we organize business conferences and presentation in Germany. So let us now turn to the Belarus credit rating, and on 10th of July, we revised the credit rating of Belarus and confirmed it at B level, both in national and foreign currency, which means moderately low level of creditworthiness. At the same time, given the current economic situation, downturn, and future uncertainties caused by COVID-19 outbreak, we changed our outlook from positive to stable. This adjustment in our outlook mostly reflects the negative forecast for the economy growth, external position of the country, and government finance. So first, I would like to start with the factors which support our rating decision. And Belarus, as you see on these graphs, Belarus has moderately high level of economic development in comparison with its peers, non-oil post-Soviet Union countries. On the left chart, you see that GDP per capita of Belarus was almost $21,000 US in 2019, which is the highest value among peer group. Moreover, the country demonstrates a better level of investment in human capital, and it ranks at 50th position at Human Development Index in 2018. One of the reasons why the country has the so relatively high national welfare in comparison with the peer group, it's historically close relationship and integration, and also support from its main trade partner, Russia Federation. And next positive factor is the solid international reserves, which cover 2.5 months of country import, as well as by more times reserves covers short-term obligation of public debt. You can see on the left chart the active build-up of reserves in 2019, and after they reach a peak in the end of 2019, some portion of foreign currency was used in the first quarter to smooth the volatility on the currency market. However, as of June 2020, reserves amounted by almost $9 billion with a predominance of foreign currency and monetary gold, more than half of international reserves. And we expect that the level of international reserves will be stable within the lower threshold set by the monetary policy, at least $7.3 billion, and they will support the debt servicing and external position of the country in the short-term period. The next positive factor is the favorable government's debt servicing. The public debt has favorable maturity structure, as you see on the right chart, comprising mainly from long-term agreements, and also the short-term debt is estimated at favorable level, less than 7% of GDP in 2020. Also, I would like to mention that as part of the debt management strategy, the government has a restriction to refinance annually no more than 75% of the existing debt. And in this year, in 2020, the sources for repayment will be new borrowings and partially the international reserves. Already in the first half of this year, were placement of the government bonds on the Russian capital market and Euro bonds placement in the amount of $1.25 billion. This Euro bond placement was with oversubscription, which indicates a high demand for the national debt of Belarus among international investors. However, we currently observe the growing spread between Belarusian Eurobonds and US 10-year notes, which shows the elevating country's risk on the back of the current political turbulence, which is before the presidential election this August. So, let's move to the restricting factors, which are also connected with the government debt position. As you see on the left chart, due to the conservative debt management, debt level was reduced to 43% of GDP as of the end 2019. Even though the debt has favorable structure, as I mentioned before, and comprised mostly from bilateral and multilateral agreement, we consider the risk of high concentration on the largest creditors. Russia and related Eurasia Fund for Stabilization and Development account for over 60% of external debt, and it makes the further refinancing strongly depend on the state and condition of political relationship between two countries. Also, at the moment, Russia and Belarus positively agreed to make amendment in the terms of loan for construction of nuclear power plant. It's almost $5 billion US, and they agreed to prolong the grace period by 2 years until 2022, and it's positive for future debt servicing for Belarus. However, there can be no assurance that Belarus will continue to receive similar financial assistance from Russia in the future. Second risk for the government debt stems from the high share of foreign currency, which comprise almost 98% of direct debt. As you see on the left chart, a high exposure to foreign currency makes the debt position extremely sensitive to fluctuation of the Belarusian ruble. And given the expected weakening of the national currency this year, on the back of oil price volatility, we consider that the general government debt can rise again up to 47% of GDP till the end of this year. So now we are moving to the monetary policy, and over the past few years, the National Bank reached progress in achieving price stability with a transition to inflation targeting and free float exchange rate. As a result, we observe the less volatile and lower inflation in the end 2019, which was within the 5% target of the National Bank. And from the second half of 2019, the regulator started relaxing, which is continued this year with reducing the refinancing rate to 7.75%. Now it's the historically lowest rate for Belarus. And we expect that inflation will be slightly above the target in the range between 5 and 6% this year, given the effect of weakening demand also. However, we consider that effectiveness of monetary policy is still low, and it restrict our credit rating. The monetary channels are still constrained by high financial dollarization of the economy and subdued local financial market. Moreover, the National Bank has limited independence and exposed to political influence. In this regard, we can say that institutional development is also a restricting factor for Belarus, as it was constrained by the presidential centralized political influence on the government and business. And now we're moving to the next restricting factor, the economy negative forecast for this year. After a weak GDP growth last year, we observed the future slowdown, mainly caused by restriction on Russian oil supplies. In this regard, the industrial production decreased by almost 4% in the first quarter. However, it was partially compensated by ongoing progress in IT sector. Also, Belarus successfully agreed in March with Russia about oil supply and agreed to additional discount, which can compensate losses from Russian tax maneuver. However, in the second quarter 2020, the COVID-19 outbreak, together with the drop of oil price, affected the Belarusian exports. And we can expect that this year the economy will contract by almost 6% this year, with subsequent recovery next year in 2021. However, the speed and the scale of recovery will largely depend on the dynamic of recovery in Russia and in the European Union. Also want to mention that in response to COVID-19, the government implemented some measures to support the economy, which mainly include tax holidays. However, direct financial support is likely to be available only for the state-owned enterprises. The next restricting factor is the fiscal position and forecast for the fiscal balance. You can see from the graph the favorable dynamic of fiscal position during last several years, which was due to the conservative fiscal policy. Authorities has made progress in improving fiscal policy and budget discipline, and has been steadily reducing expenditures and at the same time strengthening the revenue. This led to the surplus last year in 2018-2019. despite the weaker revenue caused by oil shocks. I mean, decline in oil refining production affected by contamination oil, and as well as decrease in export duties due to the Russian tax maneuver. This year, after the current disruption from the COVID-19, for the economy, we expect the transition to the budget deficit, which may widen to 5%. However, the scale of the deficit will largely depend on the government plans to allocate funds to the infrastructural projects and support to the state enterprises. Therefore, we think that the fiscal position will be under pressure this year, and we expect that the government will carry out the conservative fiscal policy and primarily financing the social sphere and healthcare to support the country and population. So now we are moved to the negative factors, and it should be noted that the economy development is also constrained by the long-term structural problems arising from the excessive footprint of the state. The government enterprises, and especially state-owned banks, continue to dominate in the economy, concentrating about half of the total workforce and value added. State companies need radical reforms and decreasing of its share in the economy. However, we see that the launch of full-scale privatization is constrained by the lack of political will, weak corporate governance of the state companies, and low transparency of these companies. The absence of the government reforms in the public sector also restrained the development of domestic capital market, which remains weak and underdeveloped, as the capitalization of the joint stock companies listed on the local stock exchange did not exceed 7% of GDP, and the market highly concentrated on the several largest public companies. So in this regard, the next negative factor is the subdued banking sector. In 2019, we see some progress in loan growth. The decline in cost of borrowings led to the 10% of growth of banks' loans to clients. However, the role of the banking sector is not expanding. Instead, in 2019, the bank assets to GDP was almost 58%, and domestic lending to GDP was 40%. It was decreasing. The concentration also on three largest banks is very high and exceeds 60% of total assets, which considerably affects the competition in the banking industry. On the positive side, the main financial indicators were stable. Capital adequacy ratio stood at 15%. Banking industry remained profitable with ROI and ROE at 1.6 and 10.4% respectively as of April 2020. Along with that, the regulator introduced a number of measures to support the banking industry and to decrease the impact of COVID-19 on the banking system. The key measures for the banks include credit holidays for banks and clients, as well as mitigation of prudential requirements and releasing the capital conservation buffers for banks. Non-performing loans dropped to 4.6% as of end 2019. However, taking into account the current economic downturn, we consider that the long-term structural problems, such as the high share of foreign currency and concentration on state enterprises loans, it's a high risk for loans quality, which also was reflected in NPL growth this year, up to 5.3% as of first quarter 2020. The state-owned banks account for 62% of banking system assets, which may lead to materialization of contingent liabilities for the government in the case of worsening of the situation. And given the high concentration of loan portfolios on state enterprises, with hidden problems and large amount of preferential loans. The share of such loans is estimated around 1/3 of all corporate portfolios of banks. Thus, we see some negative forecasts for the development of banking indicators in the short-term period. So additionally, for our credit assessment, we take into account two stress factors for Belarus, which reduce the credit rating. First stress factor is the high dependence on Russia, the main trading partner, which historically supplies oil and gas at below market prices, and Russia also presents the main market for Belarusian export. As you see on the left graph, the current account deficit amounted to almost 2% of GDP in 2019. It was mainly due to the weak export affected by oil industry shocks. In the medium term, we expect that the external position will be largely exposed to the continuing deep contraction of in Russia and the European Union, and also thus we assess the uncertainty also in future relationship with Russia as the main risk for the external position. In negative scenario, the change in the format of relations with Russia will harm the economy. And the second stress factor is the level of financial dollarization. As I mentioned before, it was increased and remains one of the highest among the countries in the region at 50% and 61% of loans and deposits at the first quarter 2020. The currency risks highly significantly limits the effectiveness of the monetary policy and increases the economy's sensitivity to currency fluctuation. And I would like to finish my presentation with the sensitive assessment of the possible developments that could affect either worsening or improvement of Belarus rating. So we can rise the rating if we will observe the faster and stronger recovery of the economy of Russia and the European Union, which can lead to an improvement of the external position and export of Belarus. Also, the radical reforms of the public sector could increase efficiency of the state enterprises and improve competitiveness of the economy. It can also be positive factor for improving the credit rating of Belarus. And also in the case of gradual improvement of financial dollarization levels and expansion of the role of the financial market and the banking system of Belarus, it can rise the efficiency of the monetary policy and also positively affect our credit rating. And the following developments could lead to a downgrade of credit rating. First, continued lockdown measures in the country and longer period of turbulence of corona crisis in the global economy can harm and deeper contract the economy. Second, the changes in the format of relationship with Russia may lead to a worsening of the fiscal and external position. And finally, significant deviation from the current monetary policy and fiscal policies may lead to macroeconomic instability and also negatively affect the credit rating of the country. And we will keep monitoring the situation in Belarus, and the next our rating action for Belarus will be in January 2021. Thank you very much for your attention.
Thank you very much, everyone. I would like to invite the next speaker of our webinar, Kateryna Bornukova, the academic director of BEROC. She will present the current trends in Belarusian economy and short-term focused. So, Kateryna, can you share the screen?
Sure, thank you, Vladimir, and thank you, Denis, for a great presentation. Not much to add, so I think I will be quick and short. So indeed, we entered this year with even before knowing about COVID or oil conflicts, we entered the year with a very weak outlook. So all the international organizations projected growth rates in the area of 1–2% of GDP. And the year started out quite poorly with the oil conflict in Russia. We also had one of the potash fertilizers contract expired and the other one expiring in the spring. And then COVID-19 came. And of course, well, Belarus was did not introduce any lockdown measures, but it still was affected because, first of all, people were self-isolating. Second of all, because it's a small open economy, which is very dependent on exports, and demand for these exports fell greatly. So what we tried to do when the situation was evolving, what we tried to do in spring is sit down and try to forecast with the economic models, you know, what's going to happen under different scenarios of COVID-19 crisis and Belarusian response to it. And well, here is a scary table of our estimates for different scenarios. So let me just briefly explain to you what's going on here. So the first letter, either S or L, is the size of the demand shock that we tried to estimate, small or large. And well, running a bit ahead of myself, what we are seeing right now looks more like a small demand shock. And then we were also trying to model different shapes of recovery of the global and Belarusian economy, either U-shaped or L-shaped recovery. And what you see here is, probably it's best to concentrate on the last two lines. These are different projections of growth, GDP, and consumption growth rates for this year and for the next year. And you see that under the best scenario, our projected estimate was minus 4.7% contraction, and under the worst case scenarios, the contraction could reach 12% of GDP. And the biggest effect came during the second quarter of 2020, so something that we already know what happened right here. So even under the best scenario, we were expecting the GDP to contract 10% in the second quarter. And this is the visualization of these two scenarios. So basically, these two lines are the best case scenario of small demand shock and U-shaped or V-shaped recovery, quick recovery, right? And you see that even under the best scenario, we were expected to rebound to the pre-crisis levels only in the second quarter of the next year. And there were, of course, much more scary scenarios as well. But what happened in reality? So this is what we see in the reality. This is the quarter-on-quarter growth rate, which is annualized and also seasonally adjusted. Now, what we see in the first quarter and in the second quarter is that, well, you know, no projected tragedies actually happened. Again, we were expecting in the second quarter, even under the best scenario, we expected the contraction of 9%. That didn't materialize. So the reality looks much better than our expectations. Although, of course, we are now experiencing the deepest recession over the very long time. So does that mean that we are out of the woods completely and the danger is already behind us? Well, indeed, first of all, the demand shock turned out to be not large, but rather small, you know, roughly 20% of external demand shock. What helps is that we've been able to renew our potash contracts in particular, and also to restore oil supplies, although the oil demand for oil refinery products remains very weak. So if we look at year-on-year estimates, the GDP contracted only by 2.9% in the second quarter. So the big question is what is ahead of us. Should we expect further and fast recovery, as our Ministry of Economy recently suggested, that basically by the end of the year, we are out of recession completely. So to answer this question, we need to understand what was going on actually. And what we see, what is going on is that the government is actively using its administrative control of state-owned enterprises to smooth out GDP contraction, right? So yes, the demand for our outputs is falling, but state-owned enterprises, they are pushed to maintain production. And of course, that results in rapid growth of inventories. State-owned enterprises are also doing their best not to lay off workers. That in turn supports internal demand, but of course that radically deteriorates this financial state of state-owned enterprises. And moreover, the banks are very reluctant to increase credit to state-owned enterprises. And despite the fact that the banks had very high excessive liquidity, they were reluctant to provide loans for the real sector. And that caused, a huge political pressure onto the banking system and onto the policies of the National Bank. In particular, the National Bank was literally told by the president to relax its policies, to soften its monetary policy, to make it more stimulating, to offer credit to the real sector. And the National Bank went on to use non-conventional measures to make banks credit more actively. So what do I mean by that? In particular, the National Bank stopped receiving liquidity deposits from the banks. So actually now the banks have to, have to do something else with their excessive liquidity. They cannot just keep it. As a result, the interbank rates went down from 7% to 3% in July. So this is the kind of policy which is, not very transparent, in the sense that it's the monetary policy is not done through the conventional tools like interest rate, but rather through the regulation of liquidity. So, of course, this policy, we see that it is successful in smoothing out the GDP, but it also increases the financial risks. As I already told you, the financial state of the state-owned enterprises is worsening, so they are accumulating losses. We can expect non-payable loan growth, but we might not see it in the statistics immediately because there are some changes in both the regulation and statistical methods. We can see that the real sector is experiencing liquidity shortage, both in foreign and domestic currency. It's often credited in foreign currency, so it's not the problem which could be easily solved by the National Bank. But even when it can be solved in terms of ruble liquidity, any monetary policy action should take into account that, inflation expectations are still very unstable and sensitive in Belarus, and there is lack of room for monetary maneuver without increasing inflation risks. And of course, there are risks of, growth of non-payments and full-fledged financial debt crisis, and there are threats to the sustainability of the public debt because, as Denis has clearly showed, most of it is in foreign currency. So regarding the public debt and some of other financial risks, they are not immediately threatening. Why? Because we have accumulated certain foreign currency liquidity, both when it comes to economy in general and the public sector. So what you see here, the bars are the percentages on the right axis, and these are relations of reserves to either the short-term gross external debt or the amortization of the growth of the external debt. and the lines are in billions, so these are net positions or net assets. And you see that right now we are in the best position over which we have seen over the last several years. This is, we should be thankful for this, for the quite prudent policies of both the National Bank and the Ministry of Finance over the last several years. And that gives us certain, let's put it this way, safety box or freedom to, at least in the short term, to be secure that we will be able to manage shocks even if we do not have immediate access to international funding. So another risk is connected to inflation expectations. We've been able to tame them down after the normalization of the monetary policy in 2015-16. But still the expectations are very fragile in the sense that people do not have high trust in the Belarusian ruble, and any movements in the currency market or in the financial market will be will probably, most probably, cause a surge in inflation expectations, and that leaves very little room for monetary policy softening without any effects on inflation. So what I have in this graph is how, how our projections and our projections, model projections are in dots here of GDP and consumption, how they differ from what's going on in reality and what we project to be going on in reality due to this policy adjustment. And what we can see here is that, well, by comparing, say, the blue line, our projection, model projection for the GDP to the policy adjusted GDP, the black line, the solid black line, we see that without this policy intervention, the GDP drop would be more, well, GDP contraction will be much deeper, but the economy would also recover quickly. Right? Instead, what we see here is, flattening of the contraction, but also the prolongation of the crisis. It also means, yes, we will have less contraction right now, but it will take us longer to recover from it due to this accumulated inefficiencies and financial risks. So the range of scenarios looking forward is actually quite big. Right? Extremely wide. Why? Because it will depend on many, many factors, in particular, whether we will continue these policies after the election, right? And whether we will be able to secure some international funding to continue debt repayments without sacrificing our international reserves. So the best case scenario is the recession of about 3.5% this year and a very slow, prolonged recovery afterwards without severe financial stress. This is, again, if no financial risks materialize. That would require a strong global recovery, no political shocks, both connected to either elections or relations with Russia, and effective policy responses in the sense that the government would slowly phase out the support for the economy without causing any financial distress. But there is also a worst case scenario of a severe and prolonged recession with financial turmoil, something similar to what we have seen in 2009, 2010 and 2011, where, yes, indeed, the government was able to smooth out the great recession crisis, but in the end of the day, we had huge currency crisis in 2011, right? So we are not there yet, but if we continue these policies and expand them, we might get into the situation where our poor economic policies cause financial turmoil, and if that is accompanied by poor global recovery or by some political shocks, we may end up in a very deep and prolonged recession this time. So this is all from me. Thank you.
Thank you very much, Kateryna. Thank you for your great presentation. Actually, there were no repeating with our presentation. It's just a different view, and I see we are much more pessimistic than you. So far, like minus 6% in our base scenario, and you have different figures. So let's move to the Q&A part. We already have one question. First of all, I would like to mention that unfortunately, all of the representatives of authorities, including the National Bank and the Ministry of Finance, refused from participation of the webinar this time. And this question mostly would be good to address to them, but probably Denis or Kateryna can comment on it. So when do you expect the nominee account concept to be presented on the market? And currently only beneficiary accounts can be opened. And the second question, what type of government issued instruments are currently offered on the market? Short-term, long-term, and how often the actions are held? So as I remember, currently on the market, there is a government bonds, both national and local currency issued, but so who can comment on this question, please unmute if you have something to add.
Okay,
Denis.
Regarding government bonds, I think, yeah, so now it's, we see that government issued instruments we have from local market, and as I mentioned, we have Euro bonds and Russian ruble denominated bonds on the Russian capital market. So it's like long-term government bonds, short-term government bonds, and national and foreign currency. So I think there's a wide range of the bonds presented on the market. However, local market is, as I know, it's closed for foreign investors now, and yeah, so it's, government has limited possibilities to raise funds on the local market. Yeah, what type of I guess if Kateryna has something to add. But about for the first question, nominee account and beneficiary account, I think it's a very specific question. It's more connected with National Bank. So we can I cannot say not, now I don't know the answer, the right answer, but yeah, we can find some information or ask even ask regulator, yeah, and then send this question to our participants. Answer this question.
Okay, let me add a bit on the bonds. Well, first of all, we have certain problems right now with communication. So, for example, the Ministry of Finance is no longer publishing the plan for the auctions. So we don't know actually what's going to happen in the next several months. We also have kind of a lack of short and long-term bonds in national currency. And this is this has been, you know, stopping the development of the financial markets in Belarus for a while. But the reason for this is that the Ministry of Finance right now is keen on finding funding in foreign currency due to the fact that most of the debt is in foreign currency, and it's much easier not to create additional pressure on the exchange rate market within Belarus for them to issue bonds both within and outside the country in foreign currency, not in Belarusian ruble. But let's see if something changes right now, because again, as I told you, we see that there is a huge excessive liquidity in the banking system. And as the National Bank has stopped receiving deposits, maybe the Ministry of Finance would find it interesting to issue short-term bonds in Belarusian rubles, which would be more manageable, let's say, and also needed given the increasing budget deficits that we're seeing right now.
Thank you very much, Kateryna. So I remind all participants that please provide your questions to the chat part. So far, I have a question to both speakers. So as a rating agency, we are observing different CIS markets, including Central Asia, Caucasus, Russia. And what we see, at least for Kazakhstan, Russia, Armenia, partially for other countries, that the banking systems of these countries are much more prepared to the current crisis as compared to the previous episodes, let's say 2014-15, 2009-2010. Even Kazakhstan, which had a lot of problems before, they are more prepared. So the central banks or local regulators, they made the supervision report, the asset quality assessment. A lot of weak financial institutions were out of the market already by end of 2019. But for the Belarus, it's slightly different from our point of view. So the main risks of concentration, the poor asset qualities, remain mostly unchanged. So what's your view of the stance of the banking system as compared to the previous crisis?
So I will start with answer. So as I mentioned, the system is highly concentrated on the large banks and especially state-owned banks with a high portion of preferential loans to the economy. And only, I think, last several years, the strategy of the government was changed to avoid and to stop this preferential lending. However, we see that political influence still high, and as last situation with one of the biggest private bank, we see, you know, this situation with Belgazprom Bank, and it also it will not add credential to the Belarusian banking system, and the system has very low investment attractiveness for foreign investors, and it will not add additional attractiveness. It will even harm for future the system. And yeah, I think that situation can change only if we will see the prolonged and radical reforms of the public sector, with avoiding and decreasing of the share of preferential loans, and improving of institutional development in the country. And yeah.
Thank you, Denis. So, Kateryna, what's your view on the banking system stance currently?
Yeah, well, I'm not a big expert on the banking system, but this is true that no big institutional improvements happened, although the banking oversight is quite good, and there is this huge problem that the banking system is dominated by state-owned banks, which are often forced into giving out preferential loans, and this practice is restoring right now. This year, although it should have been the year when it should have been the last year of preferential loans practice. Now it doesn't look like that. And we also see, you know, threats going out. Well, the banking system is threatened by certain very hurtful policies implemented right now. Like, first of all, the policy that there is this informal policy that the state-owned enterprises should switch from the private banks to the state banks. That hurt the overall stability of the banking system, you know, in the moment when it was fragile as it is. And also the Belgazprom Bank affair is, of course, also a huge blow to the stability. And we see people taking out their deposits of the banking system and losing trust. So this is is, of course, not boding very well for the sustainability of the banking system in general.
Thank you very much. So we have one additional question in the chat. So in your opinion, will the National Bank of Republic of Belarus continue to reduce interest rates? And what could be the interest rate target level? So, yeah. Who is answering? Denise, okay.
So the question is regarding, as I understood, the refinancing rate of the National Bank. And yeah, taking into account the current situation with inflation dynamic, last month we see the inflation was a little higher than month before. It was 5.2%. Yeah, but the National Bank, I think and I hope that will continue relaxing and yeah, to stimulate the banking lending and the economy. Yeah. However, I think it will be balanced. The regulator will balance between the need to control inflation in the within this target level 5% and to stimulate economy. That's why I think it's several rounds of cutting of financing rate will be next within maybe next quarters, and it probably will decline to 7%. Yeah, but I think not more.
Thank you, Kateryna. Do you have your opinion on the interest rate levels?
Yeah. I will reiterate that there is now huge political pressure on the National Bank to lower the interest rate. So I think it will continue doing that. But, well, just yesterday, the president once again had a meeting on the banking sector and reiterated that the monetary policy should be more stimulating and sustaining economic recovery. I think we will see the rates going down, and this is, you know, this is actually, well, maybe this is something optimal because we see that inflation is not increasing dramatically. In this case, this COVID-19 crisis is quite specific that it doesn't generate huge pressure on prices due to demand contractions. So there is, you know, space to lower the interest rate to say 7% per annum. But again, what is going on right now is that the interest rate will play less role, and what's going on with liquidity in the banking system would be much more important. And as I said, right now the interbank interest rate is only 3%. So this is right now that plays a much more important role for the banking system and for the economy in general than the refinancing interest rate.
Thank you very much. So I remind you that we still have some time for the Q&A part. However, since
we have one more question.
Okay.
It was personally to me. Yes, regarding slide 12. I will try to maybe to share screen again and to return to this slide. Yeah, because, yeah, this question regarding the difference between the reason and the difference between adjusted fiscal balance and official consolidated balance. So. As you can see on the right chart, yes, there was a high difference between official consolidated balance figures from 2015. You see that there was difference as officially declared fiscal stance was in surplus, whereas the adjusted fiscal balance, it was discrepancies between methodology of Ministry of Finance and IMF, and the main difference is the off-balance expenditures, mainly related to the infrastructural projects such as construction of nuclear power plant. But last year we see that the methodology of Ministry of Finance and IMF was adjusted Ministry of Finance, taking into account such expenditures, and we see that the difference between adjusted fiscal balance and official fiscal balance becomes not so high. Yeah. However, we assess this year in our forecast, we think that the scale of deficit and the difference between officially declared deficit and adjusted deficit will depend on the government plans to allocate funds for such infrastructural projects. I hope that in the end of the year we reassess and we will see that this difference will not be so high. However, yeah, I think this deficit will be like in the interval in the range of 4–5% of GDP this year.
Thank you, Denis. Kateryna, could you actually comment on the fiscal measures of Republic of Belarus? As we understand, basically, Belarus so far still is the only one country in the post-Soviet area which don't have strict lockdown measures still. And there were no strict lockdown measures. However, there was some already some fiscal support for at least for the state-owned enterprises. And taking into account, especially that election is less than 1 month, do you expect more fiscal support, including the social support?
Yes, we will certainly have more social support. So just to give you one figure, in May, the deficit of the budget, including the social security fund, was around $400 million. So just for 1 month. But I also expect that that would be the worst month, in the sense that at that month we still didn't have a lot of revenues from the external tariffs, in particular the potash fertilizer tariffs and oil refinery tariffs. These things should pick up probably in as we go forward. But what will pick up also is social expenditure, because the president has already announced that we should increase the pensions before the elections. So that would result easily in extra several $100 million of expenditure, depending on the size of this increase. And again, due to the lack of readily available data, we don't see exactly how much money was spent on supporting the state-owned enterprises right now, right? But yes, we can expect that, we had projections of the budget deficit even before COVID-19, right? Right now, it will probably be much larger, and I think the estimates that Denis has shown us are quite real, But again, we will have to wait and see what happens to the policies after the election.
Thank you very much. We have, I think, the last question. So from Andreas, do you have also statistic about the development of trade receivables inside the Belarusian companies, one source of financing? Yes, thank you for this question. We know that it's very important to look at this statistic. However, the Belarusian companies, like especially state-owned enterprises, they are very non-transparent on the financial statements in general, and therefore this statistic is also not fully available for us. So if colleagues have something to add about the trade receivables especially, so if you have something to add. No. Denis? No. Okay, first of all, I would like to say thank you very much, Kateryna, especially for the professional analysis, and we really appreciate that BEROC as an independent research center joined our webinar. We hope that the next time also authorities, especially National Bank and the Ministry of Finance, also join our webinars. And saying that, yes, for sure, we will send all presentations from all speakers to all registered participants. So also, let me make a screen share here. So basically, as you can see here, we already have the recording of our previous webinars regarding the credit ratings of Georgia, Russia, Kazakhstan. And this webinar will be also available on our YouTube channel for the recording. All presentations will be available on our website. And feel free to contact us directly if you have any other questions. And I would like to invite all of you to our next Sovereign webinar, which is planned for the 15th of September 2020. And we'll be focused on the Republic of Uzbekistan. However, this time we hope to combine it with other Central Asia countries, including Kyrgyzstan and Tajikistan, and see what kind of developments are going on in the Central Asia. And for today, I hope we answer all of your questions. If you have something to ask, please feel free to send us emails. You will receive all presentations. Thank you, Denise. Thank you, Kateryna, and thank you all participants from European and CIS countries. Thank you very much.
Thank you.
Thank you very much. Have a nice day.